Hello, everybody, and welcome to CoinGecko's quarterly report of Q3 2022 on all things crypto, the crypto market, different cryptos, and the state of the um, basically cryptocurrency in general. So today I'll be going over the different sections. If you like this content, please like and subscribe. I'll be going over the market landscape, Bitcoin analysis, Ethereum analysis, DeFi analysis, NFTs, and exchanges. Uh, there will be timestamps in the description if you want to click on those. And if there's a specific section that you find more interesting, just feel free to click on that. Let's get into it. So for the market landscape, we saw that the total market cap change has actually increased based off of the past quarter. And this is, sort of cementing the fact that this might be a technical bottom right here at July 2022, July 2022. And that is because the market cap is still increasing in spite of, price action has not been there. So there's a divergence in market cap increase and price action, which might mean that accumulation is happening in this in this moment in this quarter. So we see that Algorand exited the top 30 while Ethereum Classic took its place, probably doing due to the merge. As far as like a long-term play goes, I think that Ethereum Classic is more of a short-term play in terms of what it can offer based off of, in terms of, in contrast to Ethereum, it's not much you can't build. It's not as adaptable and it hasn't been updated as like Ethereum has. So in terms of a short-term play, it might be a good position, but as far as like a long-term investing perspective goes, I wouldn't put all your money in Ethereum Classic. Some other notable moves include Ripple overtaking Binance USD at number 6. Now this is important because I'm a US investor. We cannot trade or invest in Ripple because Ripple is classified as a security by the SEC. What does this mean? This means that if Ripple is still increasing its market cap position, it means that international investors are using it a lot and are investing into it a lot. And all these other tokens which have US-based investment are still not catching up. So that means that the proportion of demand for Ripple might be, far exceeding that of other coins, which is very interesting to know. We saw Matic moving from 19 to 15, and Uniswap moving from 27 to 18. And Uniswap had an update. I'll talk about this later in this video, I think. And Q3 the trading volume was about the same. Okay, so market dominance. Market dominance was about the same. We see it was relatively stagnant despite the general loss of price action in this time period. We see that Bitcoin dominance fell slightly from 41% to 38%, while Ethereum climbed from 14% to 16%. This is likely due to the merge, and is also very interesting because during a bear market, it's normally altcoins that underperform Bitcoin, as Bitcoin is traditionally looked at as the market. It's basically a market fund. It's basically, I like to think of Bitcoin as like an index fund for the general crypto economy, because anything that you trade is affected by Bitcoin in this market. You can trade an altcoin, but the altcoin, even if it's outperforming Bitcoin, if Bitcoin's falling, the altcoin is still gonna, go relatively sideways or just fall. So it still can be outperforming Bitcoin, but I mean, it all depends on what Bitcoin is at the moment. So in a bear market, Bitcoin is king. In a bull market, altcoins are king. And that's why you saw like last bull market, altcoins going 200%, 1,000%, all these crazy numbers, because they can do that when the general trend is going up. Okay. Uniswap, Ethereum Classic, and Cosmos. Okay, let's talk about price returns. So we saw that all top 5 cryptocurrencies all fared relatively well based off of Q2. Ripple outperformed, followed by BNB and Ethereum, which is interesting because BNB it's the only really centralized coin on this list, other than yeah, it's one of the only mainly like large centralized coins on this list. And what we've been seeing is that the centralized companies in the crypto industry, you have Three Arrows Capital, you have um, Terra, Luna, you have Celsius. All these centralized companies have been basically becoming insolvent, but the decentralized tokens and the decentralized protocols have been performing fairly well, which sort of harkens back to the original idea of Bitcoin and having the decentralization available for every citizen of the world, per se, to have a share of value or exchange money outside the limits of the government. So DeFi token prices surely lived up to the DeFi is dead meme last quarter. By contrast, the top 5 DeFi tokens are the only category in green. This is very important. So Lido Finance, I think that's the LDO, led the pack by a large margin, increasing 3.5 times in quarter three. So this is probably just a reaction from the previous quarter, how they fell a lot. Like I said, in a bear market, altcoins are definitely are normally underperform Bitcoin. And we saw BNB and OKB make a good recovery. Play to earn tokens, we've seen a really bad in the past half year or so, really bad, really hard time for the GameFi industry. So we'll see whether next quarter there's any relief. Let's talk about the stable coins. So this is very important. We saw that the stablecoin market cap changed 3.1%. What does this mean? This means that people are going for more risk assets instead of stablecoins in terms of investing in the cryptocurrency. This is extremely important to note. This means that the large institutional players at the moment are putting money into the altcoins and Bitcoin at the moment instead of hedging their money with the stablecoins and like generating a stable yield, that sort of thing. They don't have the collateral in stablecoins anymore, which means that they're putting more money into hopes of a future bull market or a consolidation, which is something that's very it's very appeasing for if you want to feel like this bear market is almost out almost out of the gutter. So the top 5 stablecoins remained the same. And Binance USD increased 18% as a result of USDC dropping after the tornado cash sanction. Okay, and we see that the correlation between S&P 500 and Bitcoin has been very, very powerful in this last quarter. Correlation of 0.85, that's 85%. It's very strong. We said that the total Bitcoin market cap has basically moved in tandem with the S&P 500, as well as the total crypto market cap. So this is the S&P 500. What's important to note that Bitcoin, even though it was more volatile, it outperformed the S&P by about 5 times, which is insane. So in this market, Bitcoin isn't being viewed as a risk asset anymore. The institutional players are either consolidating or they're out of the market at this point, which means that if the S&P 500 continues falling, we're going to see more consolidation. Now, if the S&P 500 starts going up again, it might mean that Bitcoin is again viewed as a risk asset. So, but we see this dual role of Bitcoin as both a risk asset that operates very much like a technology stock, but also as Bitcoin as a hedge or a digital gold. So it'll be very interesting to see its correlation with S&P 500 going forwards, depending on what the S&P 500 does. All right, let's talk about Terra Luna, which I had a lot of money invested in. So we saw Three Arrows Capital file for bankruptcy. We saw Celsius file for bankruptcy. We saw that Nomad Bridge exploited, ZipMax halted, Solana Slope, all these different bridges and not exchanges, but just um, centralized protocols which weren't necessarily written into the actual protocol of the tokens themselves. We see that there's been a lot of change um, in the past year, and I honestly think it's for the better. There's going to be less large, centralized, unregulated organizations in the space, and that's a good thing for the just the general environment. So I did have money in Nexo, and the only reason that they were sued was because of the ineptitude of the U.S. government and adopting, relevant and operative crypto standards. Not Nexo is not a Celsius. It has the verifiable assets, and it's just that people were scared that the same thing with Celsius was going to happen again. So that's why this happened. Okay, so we've seen Terra Classic have kind of a revival. Terra 2, Luna, not really, but both of them just really dropped in the past, amount of time. We saw that Tornado Cash had a bunch of sanctions, which just basically had a giant effect upon the entire crypto market. We had DeFi projects affected. We had the actual smart contracts affected. We had the protocol and the node operators affected, and then of course anybody that had their money in these things. In terms of getting their money out, or even if their money wasn't directly tied to Tornado Cash, it's just a giant debacle. So we saw that Cardano and Atom Cosmos had updates. So Cardano had its Vassal hard fork, which was a big improvement on the development process and the block propagation time. So that helped with the efficiency of Cardano a lot. We saw that Atom released its white paper for Atom 2.0, the Cosmos Hub. So the thing about Atom, so Atom Cosmos is think of it as like a interpolation of different cryptos. So it allows cryptos to exchange information with each other, different protocols, which is very important. In terms of this environment when there's so many different protocols, and in terms of getting scalability between the two without risking security like a bridge would do. Atom is really the center of all that. So that's why I have some money invested in Atom. All right, so let's move on to section 2, Bitcoin analysis. So we saw that Bitcoin only went down 1% in quarter 3, 2022, which is really amazing. We saw it go down 55% in quarter 2, but in quarter 3, it's just been exactly the same. We've seen trading volume relatively stay the same. I would say it increased a little bit from quarter 2. We saw that a lot of institutional players entering the Bitcoin space officially. So we saw that BlackRock launched a private Bitcoin trust, MicroStrategy, and then Ontaro test version announced, which allowed more Lightning Network application development. The hash rate continues to trend upward, which means that a lot of people in Texas and Nevada and I think Colorado, where there are big energy Bitcoin companies that have hydroelectric dams and solar energy grids that can use that excess energy to mine for Bitcoin. This is why the hash rate is increasing, which is great news in terms of institutional adoption for Bitcoin, which is probably why we've seen the volatility decrease in the past, year or so. If you compare the volatility to what it was before, it's not just, there's more investors or the price is higher. It's that we have more institutional leverage in the system. We saw that some operators have been selling some of their Bitcoin holdings to fund their operations. This is true of also the stock market in general. So as we have seen, if the stock market takes a plunge down, yes, there have been some movements into Bitcoin, but there also have been a lot of movements out of Bitcoin in terms of raising liquidity for um, future um, future moves back into the market. So if the market is falling and these hedge funds and other broad institutional investors have a bunch of money in the stock market, they're going to have to sell off their risk assets outside of the stock market in order to protect against their losses in the stock market. So that's depending on whether the stock market is their focus or whether Bitcoin is their focus. But that's just a general psychology of how this happens and why these things are becoming more and more correlated. Right. So the overall hash rate is still trending upwards for now, even hitting a new all-time high on the September 11th. Bitcoin's energy usage. So Bitcoin mining has always been criticized for its alleged outsized carbon emissions and climate change impact. However, it seems that these criticisms are arguably disproportionate and often misleading. Ethereum's successful transition to proof of stake and subsequent more than 99% reduction in energy use has renewed attention and comparisons to Bitcoin, which is very interesting. So we can see that Bitcoin methane can possibly be used to mine Bitcoin, which can both carbon trap the methane, carbon neutralize the methane in the atmosphere, and also give time for general industries to shift away from fossil fuels as these very energy intensive industries move into a more renewable future. And we see that Bitcoin was only about 0.11%, which is a tenth of a percent of global GHG emissions in 2019. So these are the things you look at going forwards. It's going to get better over time, and it's not even really bad in this case. There are hog farms and the transportation industry and a bunch of other things that are so much worse than Bitcoin. And I think it's quite a misconception to believe that just because it is energy intensive that it's a bad thing, because that's true of anything in the electronics or technology industry. Okay, so Bitcoin versus major asset classes price returns. So Bitcoin has actually been number 2 on this list. Number 1 is the US dollar, of course, given the war in Ukraine, the crisis with UK bonds, the yen, falling under 150 US dollars. All these things, crude oil, you see, has completely dropped almost 30%. So has the stock market. But Bitcoin, on the other hand, has largely managed to recover compared to the equities market. And finally, fiat currencies have been performing poorly against the US dollar. As these various crises appear over the world, the US dollar has grown in value, and we shall see whether these large bond rates of the US dollar will be sustainable. We do know that the US dollar strength is both a good thing and a bad thing. From a good perspective, it's a good risk asset. From a bad perspective, it means that once things turn around, they will sell the US dollar for more leverage than other bonds. So it's really it's just basic economics. Just basic economics. Ethereum analysis. So the merge was a successful non-event. Basically did nothing. It failed to break through the 2000 resistance and then tumbled back again. Started climbing again in late August. Actually, let's just talk about early 2023. But the merge hype train ran into a headwind of bearish macroeconomic conditions. So it was successful, but it didn't really change anything. So we do see that Ethereum has been since again it's bottom in June, July 2022, like Bitcoin. There's been in a general uptrend since then. So after the merge, Ethereum is now 55% complete, according to Vitalik. I'm not quite sure how to pronounce the name, but I'm the founder of Ethereum. These are the various things pre-merge and post-merge. Okay, so staked ETH plateauing after spike in Q1. So this means that the amount of ETH that's staked in different protocols, earning a yield. These are the different protocols. You have, I believe this is Lido. Yes, this is Lido. This is Coinbase. This is Kraken. This is Binance. I'm not sure what these three things are, but there have been more like liquid staking offerings that have come to the market with the likes of Coinbase, Cloud Collective, and Frax. I believe this is Frax. So we have seen that, even though the total Ethereum has gone up over this time, it's generally plateaued. It's not been an exponential curve. So the state of Ethereum post-merge. So its net token emissions have slowed significantly post-merge, over 95%, which is great for the environment. So while the merge was not meant to improve scalability, the average gas price has stayed low, basically given the lack of large transactions. There have been an increase in the number of transactions, but the volume of transactions has been relatively low. And for that, block times have significantly improved from about 13 to 13.5 seconds to about 12.1 seconds post-merge. Here we have the number of on-chain transactions and the average gas price, the TY, and after the merge. Okay, the proof of work forks. So proof of work forks have not gained much traction in price or hash power. So it's only about 208 combined hash rate, right? It's just everything's gone down. So this is why I don't think it's a good idea to invest in proof of work forks for Ethereum long term, whether it be Ravencoin, whether it be Ethereum Classic. It's really just going to change. It's just going to go to other chains that are more up to date or have more scalability or have low transaction fees. Like I don't know whether Avalanche is proof of stake or proof of work. I believe it's proof of stake, but other coins. Section 3, DeFi analysis, and I'm losing my voice slowly but surely. Section 3, DeFi analysis. So the DeFi sector has bucked the trend, even though the market has moved sideways. We see that the DeFi share of market has increased, even though that the DeFi market cap has stayed relatively the same. This is basically about the merge and the fact that with staking, more people can make money with staking via DeFi. And that's why Lido Finance and Rocket Pool, which are liquid staking protocols, you don't have to do a one-to-one transaction. Basically, how liquid staking works is that there's not a buyer and a seller. There's a list of buyers and there's a pool of buyers and a pool of sellers, and you're just you're matched up automatically. It's not like you have to wait until you find a seller to buy, or you have to wait until you find a buyer to sell, etc. The increasing market cap mostly came from DeFi's blue chip protocols such as Uniswap and AIV. However you pronounce it. Okay, as Terra imploded, old and new contenders arise to take its spot. Right, we see Ethereum getting a broader percentage. We see Tron, drastically increasing. You're seeing a lot of people moving money now in Tron. Find a smart chain, the Optimism protocol, etc. Phantom, Polygon, Avalanche, Chronos, Terra Classic. Yeah, so Solana, the number of total value lock on Solana continues to shrink, dropping by about 15% in Q3 due to exploits that occurred in Slope Wallet, Nirvana, and Krema Finance. These are all, I've been saying it for a long time, but Solana is really just a reboot of Ethereum. There are much faster chains like Avalanche that are also much more secure. And Phantom is also one of those. So liquid staking and decentralized exchanges made strong gains in Q3. So we saw that the total DeFi market capitalization went up 31.3%. Right, liquid staking went up 271%, which was insane. Asset management went down because, of course, there's less assets in this bear market. But everything is increasing at this time, which is also a thing to note because, other than FTX, derivatives are basically banned in the US. And these other things are in a gray area right now, which means that there's a strong international presence, and the US should, modernize our lawmakers and teach them, what crypto actually is. But it's another discussion for another day. So decentralized exchanges notched a significant increase in market share, rising at 37% to 10.9 billion. The liquid staking nearly tripled its market stake, largely driven by the merge. Lido rose 264% to $1.60 in the same period. Okay, cross-chain bridge liquidity. So wrap Bitcoin, just cryptos, and multi-chain strong way ahead of the competition. So the bridges were the highest liquidity, which are, the amount of money flowing through them. We saw the biggest is wrap Bitcoin, then multi-chain, then Portal, Orbit Bridge, and Synapse. Right, this is a 57% plunge compared to the start of the year because there have been so many hacks and because of the falling volume of crypto. But still, they have fared relatively well in terms of competition. So Just Crypto has the second highest total locked value of 2.3 billion, ahead of popular EVM bridges such as Multi-Chain and Stargate. Tron has grown like 200% in Q3 2022 because it has higher yields on USDT. So that's definitely a calling point as we move forward into the post-merge narrative. We're going to see people getting, staking their coins for yield because that's really a safe option to do in the bear market. While people in the stock market might take their money out, for crypto users, the best thing is to earn a yield on your stablecoins. So Terra Bridge still has some remnants of liquidity, even though it's reduced by 90%. And then Nomad Bridge was hit for 190 million, making it the 5th largest exploit in the space. 4 of the 5 top exploits currently involve bridges, and that is unlikely that it will change anytime soon, which is why these things are so risky. NFTs. All right, so NFT winter has arrived. The total volume for NFTs has decreased 76.4% from Q2 to Q3. total trading volume has tumbled 83%, and Ronin and Avalanche have fallen out to the top 8, replaced by Immutable X and Panini. Flow has been in the top 3 because of recent sports mania, and Solana managed to double its September volume, all its competitors faltered. So we can see Ethereum, has basically followed a logarithmic curve downwards, whereas Solana has basically remained its proportional stake in terms of what proportion of the total NFT market there is. I know that OpenSea is now allowing certain Solana projects on its network. It'll be interesting to see what the future of that is, and if whether it'll start allowing other different chains under its project. So Magic Eden gains ground on OpenSea, right? So latest numbers in September 2022 show that as much as 85% of X2Y2's volume potentially came from wash trading, which is when bots are automatically buying and selling to create an artificial volume profile. The same goes for LooksRare. But Magic Eden was the only one that saw growth in September, doubling its month-over-month volume of dominance, while the rest of its competitors continued to slip. And then it recently touched into Ethereum. So it's gained ground on OpenSea's 60% dominance, and now it's 22% dominance. So we shall see whether it sustains its current momentum. Top NFT collections. So these are all basically just JPEGs, but the Solana NFTs continue to bring heat to the general Ethereum forerunners. So we saw Pudgy Penguins, Ethereum name service, how we pronounce that, Bored Ape, Mutant Ape, Renga, Zuka, Artblocks, Other Deed, etc. Primates, all these things. So Ethereum name service climbed quickly ahead of the merge, as well as the attention surrounding the 999 club and the 10K club, where you could only gain access if you had the Ethereum name service with the required digits. SudoSwap went ahead of competition with its new royalty-free NFT automatic market maker. So the old DeFi concepts of LPs and bonding curves, which were originally introduced in Curve, I believe, have now been applied to the JPEGs. So because of this, SudoSwap mainly caught fire and floated to over $30 million in trading volume in August, which is a 20 times month-over-month increase, right? Look at that. So a large part of this is due to how pseudo automatic market maker is designed to facilitate liquidity, exchange, and it's also royalty free, which is very interesting in terms of the general market. So because of this, it triggers debate over NFT royalties with different marketplaces choosing sides. You see that OpenSea is saying that we're not going to back to Web 2, and that creates centralization. And then you see other people like on SudoSwap saying that it's the future to have no NFT royalties. And then you have people in the center like Ya and X2Y2 saying they can choose to pay royalties to the collection if they're pleased to do so. Exchanges. So we saw that there was a negative 21% decrease in total trading volume from quarter 2, 2022 to quarter 3, 2022. Spot trading volumes have been decimated, briefly dropping even below $1 trillion. And decentralized exchanges have suffered much more than centralized exchanges, as most of the small player in these decentralized exchanges have left the market. This is also because most of the large institutional investors in this market are trading in the centralized exchanges because they view it as more safe. Um, so this is why they've continued to increase their dominance, including, as I said before in the first section, Binance, uh, the Binance coin and the Binance network. All of these are centralized, have been generally increasing. So the centralized exchange to decentralized exchange ratio has increased to 95% from 89% in quarter two. We're seeing some recovery towards the end of September, right? We're seeing, for example, Binance was 39%, now it's 52%. These have all been increasing, Bitmart, Coinbase, etc. Bitmark is the top increaser in the section, and Binance has finally captured more than 50% of the market. One of the reasons could have been for the zero-fee Bitcoin spot trading across all 13 pairs on their platform, including separately on Binance US. Oh, not all 13, but all 13 based on stablecoin in Binance US. So top 10 decentralized exchanges. We have Uniswap, Dodo, PancakeSwap, V2, Curve, Balancer, Sushi, Ethereum, ThorChain, QuickSwap, and Jupiter. So these had a total trading volume decrease of 37.5%. And Uniswap is still the dominant. It's been relatively, it might have fallen a little bit, but it's hard to tell with all these different oscillating numbers. Dodo has been heavily growing. We see Dodo is right here, right? It's been heavily growing. And single chain decentralized exchanges such as PancakeSwap are slowly losing market share, dropping over 60% this quarter. Derivatives and perpetual swaps. So monthly average have dropped between the 3 trillion mark for the first time in the year. We see that a drop of about 8% in trading volume, decrease of about 750 billion. And like I said, this is because big institutional investors are moving away from the risk assets to shore up liquidity for the stock market. Even though their market positions have remained largely the same for the first three quarters of the year. The only ones that managed to increase their market share are Bybit and OKX. Nonetheless, Binance still remains top dog, controlling more than half the market, 54% in trading volume. So in terms of Bitcoin perpetual swaps, we see a decrease of 2.7% in open interest. Binance has seen, I saw 7.6% share in OI in quarter three, whereas Gate.io's OI has grown by 19.4%. General performance of Bitcoin and BITO. So these are the institutional ETFs and mutual funds. So BITO ended the quarter pretty much where they started. They're still down, 58.5% and 33.1% year to date in AUM. The SEC rejected Grayscale's Bitcoin ETF, and Grayscale is going to sue them. The SEC is, I believe, currently coming up with a response to this, and the SEC has reportedly cited fake Bitcoin trades, which is sort of acting out of their authority. Because for other commodities, they have approved the spot ETF, which is kind of strange that they've approved the futures but not the spot. So this is more of what I said about the U.S. regulators being kind of really short-sighted, because we see that all these crypto companies and whatnot are moving overseas because of our basically stubbornness to accept the future. All right, that's it. So if you like this video, please like and subscribe. I do my best to keep you all updated with the current market and technical analysis and just how to make money with the stock market and crypto and DeFi and all these different ways to do it. So if you like this video, please like and subscribe, and I'll see y'all another day.